Hello guys, welcome to another market review. Next week we have some important events might cause some volatility, especially in FX. We have PPI on Wednesday and CPI on Thursday. I don't think they're going to be that important compared to FOMC or the last NFP print, mainly because the Fed has publicly announced how they are watching growth of inflation. So inflation expectations, they do not care if go up, but the market will certainly react, and mainly um, gold has shown that. The permanent bid that we are seeing in gold, I think, is pricing the policy mistake the Fed has done, causing inflation expectations to go up. So let's jump into the charts. We are super bullish gold, but we have to be aware that we've already captured and seen uh, a significant move on gold. I was just looking at the range we had from 2020 up until 2024. It's a 4-year range. The first monthly candle where we broke above was nearly a 9% candle to the upside. Now we've had a much um, smaller consolidation, and we've only moved 4%. I do think this month is gonna at least move 7.5%. That will take us to the 3,700 level. And on a weekly basis, last week it was a massive one. We moved 4.5%. And in order to get to the target, it would just require 3%, 3.5% candle, which is not that big compared to last week, especially as we gain momentum and the dollar sells off, which hasn't happened just yet. And there's something interesting I wanted to talk about. With the weak NFP print that we saw on Friday, we saw rates, especially the 2-year yield, go lower, but this was mainly reflected on gold. If we move into the daily, I have a very bullish candle on Friday. And if we go into the H1, you see the moment the data was out, how the market priced it as bullish on gold. Now we had a much weaker reaction on FX, where we saw an initial and strong impulse up, but we saw a much significant retracement than on gold. Now, the 2-year yield has been going lower, but we haven't seen that on FX. We've only seen that on gold. And I do think that FX is lagging a bit. That means that EURUSD and GBPUSD likely to go higher on this month as soon as they gain a bit of momentum. But let's start with gold. So last week we put in we put in the low of the week very early on Monday during the Tokyo session, and we barely had any resistance from the all-time high, which is the 3.5 thousand level, and we just broke above. And at this point here, I thought we were very extended, because if you look at the move which had happened ever since the breakout trade gained momentum, we didn't have any pullback. I mean, I think the most significant pullback was this one here, which was around 0.7%, and around here 1%. So I was expecting some kind of pullback, especially because I was treating the all-time high as a sort of a pivot level, mainly because we saw this reaction from price. I'm just gonna move on to the H4 to see that here. So when we were trading up here, I was cautious because I wasn't long. My plan was to see the low to be put in early in the week, but because on Monday the markets were closed on the US, it was bank holiday. I did not expect it to happen like this, but it did happen. And when we broke above, I was cautious to not chase the movement, and I was just waiting for a pullback. Now, I usually go to bed at 1 p.m. So I wasn't ready to catch any sort of pullback during my sleep. What I did was to assume that the breakout was going to gain momentum and that the structure that we're printing is to be respected. Yeah. So basically, once we broke above this level, I assume the low for the month is in. So we should not even trade here. Once we are around here, I mean, the largest pullback I would expect would be into this level, maybe. But we didn't even get there. So what I did before going to sleep was say, okay, we sort of consolidated around this area before trading higher, but we haven't had any pullback larger than 1% since we broke out. So I was expecting something larger, maybe to punish late longs around here. So what I did was basically split my orders, my limit orders, something like this. Okay, every 10 points you can see the difference. I opened some longs, so my average price, if they all got filled, would be 3.515, and my hard stop loss would be the monthly open, assuming that the low for the month is in. But even if price retraces this, I think I would have still reopened longs here with more size, because at that point I think that we should not trade here again if we are to really trend higher, because it would indicate trading back into the range. So this is like the last line of the sand. So I got filled only on these two limit longs, and as I mentioned earlier, based on the previous range breakout expansion on the weekly and monthly timeframes, looking for a target of 3.7k, and the risk to reward here is pretty good, especially if you have conviction on this idea. And now we have also macro with us, as I mentioned, 2-year yields going lower, GDP and growth expectations maybe revised lower, and we might even see talks about 50 basis points cut. So now I'm long here, and I do expect continuation into this level. Here I will be completely out of my positions. So what do I expect for next week? Well, if you are not long here, and I do want to add positions here, I'm basically looking at this H1 candle as a great long opportunity. I would assume this low holds. No, especially this was another great time to add another position, because if we use the daily open, um, well, yeah, I thought the daily open lined up or something somewhere around here, but regardless of that, this is a very bullish candle when you understand the context. This is a very similar candle to this one here, but here you still hadn't pulled back around 2%, which was something I was expecting. Once you've pulled back 2% in bullish momentum context, and you see this absorption, you are far more likely to be right to assume that this low holds and you are not going to see price trade here anymore. So because of that, my positions, I'm long from around here, and now price is above here, around here. I can move my stop loss, which were at the monthly open, into this level, and assume that next week, we will have a monthly open around this, sorry, a weekly open around this level. And if you happen to trade into this area here, and I think this gold trade is a very strong and still has legs, this is one of the best, if not the best place to add for longs. And this would likely, to me, mark the low of the week. You can also be conservative and just wait for price action to develop early in the week. It might not even reach here, but once it gets above, you can sort of start getting long. And one thing you can do in these conditions is spot these sort of price action candles, which indicate bullish absorption. At least that's how I read them. But you have to be very careful, because they only mean bullish absorption and continuation in momentum at the right spot. Only when you've had pullback. This is where you want to see them. As you can see, they don't mean shit here, because in my case of a bot, we haven't flashed late longs to punch them. So, if during the week we sort of, let me draw something, an example here. Okay. If we don't tag this zone here, and if we trade it into this zone, I would just put my stop loss like this, something like this. This would be a trade. But if we don't get that, or you just miss that, and we trade here, just let price trade higher, and maybe then you get a retest of the weekly open. This is a nice, very nice opportunity to get involved in longs, because right here you could use this low previously made as your stop loss, or if you don't get the perfect retest or you miss it, you just sort of wait for price to pull back a bit and show you one of these candles, and you can use that to maybe get long like this and continue to trade higher. This is what I've done with my longs around this area. Basically moved my stop loss from this monthly open now into this low, because I think it's highly unlikely that we're gonna see this get traded. This is basically all I've got on gold. I think there are no reasons to worry about being late. We are riding the trend, and price action supports it, macro supports it, so we just have to milk it, and I'm personally looking to add more positions into it, because I think the trade is very clear. Just have to be wary to not chase it too much and not add longs at the top where a possible pullback could be happening. One reason why we could maybe be wary is the RSI, which is overbought, but it's still too early to worry about it, in my opinion, because you want to be wary when you see a divergence, and it will likely take some time before we see that. I think you are much likely to see it happen around here. We need a lot more price before we see one of those. Maybe, yeah, something like this, where you have this price grinding up, but the RSI, daily RSI, is going lower as you make higher prices. But you know, we're still around here, so we could possibly have all this. You know, this is just an example. I think we are going to have something bigger than this part here, but this is just an example, as I said. So this is everything I expect on gold. We'll revisit each week and readjust, but for next week, bullish. And yeah, let's jump on to, I think we're gonna cover EURUSD. So when we look at EURUSD, we look at it on a naked chart on the weekly time frame. We're looking at an uptrend which has been resting around this area, and we had this flash lower, and since then the market has ranged in the last 4 weeks, but the market has not been able to push lower, and this sort of small body candles, I think they're pointing towards expansion to the upside, mainly because we took this bullish liquidity, and we've had 4 weekly candles in a row where we've had what look like bullish continuation candles. So yeah, when we drop into the daily time frame, you can see the range that I was talking about. Now, I've been wrong about euro because I was bullish on it for the last weeks, mainly because I was seeing that strength in gold. But now we've had, one attempt here, another two attempts here, and last week, I had a short setup, which I'm gonna show you, which was you line this, you mark this trend line, and if you break below the monthly open and the trend line, you can get short and put your stop loss above the previous high, and you can catch this move. Now, what I think about this is that if the market is really bearish or the range wants to continue, this sort of trade should have taken us into the range low. But it did not happen, okay? This was the low we made last week. And we started to recover all this move. And this is where we were on Friday, just before the announcement. We were knocking on the monthly open. And when we did that, when the NFP numbers came out, we traded higher, above any previous high of this range. Now we pulled back quite more significantly than we did on gold. That is expected. However, the fact that we did not trade into this low again, and we had this sort of absorption on Wednesday. This is something I mentioned as well on gold, where you can spot one of these candles at key context areas, and it will mean bullish continuation. See, we had a very explosive move to the downside, this attempt, but we sort of retraced the move. We took out previous day's lows here, and look how bullishly it closed. And then we closed the week to the upside. Now, I think that the market is sort of compressing to the upside, just like we saw with gold before it broke out of the range. So I'm going to assume that this is the structure we are going to be looking to now break. And I do think euro is going to trade higher. I think the time is next week. At least we're going to hit this H1 level. And the way I would trade it is, I think we're going to retest the monthly open. Something like this. And trade at least here. This is my target for the week. And quite possibly trade above. But when you look at how this level is drawn, it's quite holding me back, because here in July, you see how significant it was. We had many attempts breaking it, but we broke below and we traded lower. And when we had another attempt here, just look at how clean the reaction at that level was. Around here, we had the monthly open lining up. So I'm just wary, because trading a breakout before the breakout happens is dangerous. That's why my main trade idea is to get long around the monthly open and put a hard stop loss around here and take profit at this level, because I do expect that we will have a monthly open, the weekly open, sorry, around this level. And I'm quite certain that price will hit the monthly open. Now, whether the reaction is clean, I don't know. What I'm going to do is assume that this low is going to hold and put some limits. One around here. Let's change the color. This one to something else. Blue. Let's put blue. One around there. One exactly at the monthly open. And maybe some here. Even my overall position would be around there, and I can get, it's not a 2 hour, but I don't care when my conviction is this high, and I can sort of size into it. So what I think is going to happen is we'll trade below the weekly open. We'll retest the monthly open, probably get some reaction, but I do not rule out trading a bit lower. But what I do not want market to do is give me H4 closes below this level. On the H1, I'm okay. But when you look at it on the H4, look at this on the H1, how it is being used as an SR level, pivot level. But on the H4, it breached through it. So my ideal scenario would be to just sit, trade on the H1, get below, on the H4, close above, and just leave a wick around here. It would be a very bullish sign for me. And sorry, because we have this H1 level here and the weekly open around here, I don't think there's good risk to reward in waiting for price to get above the weekly open and then trade into this level, which is my first target. My second target would be around here, which is the high we made in July. So I'd much rather get long here, assuming that this low is going to hold, and if price trades below the monthly open, is going to be brief and short-lived, probably going to trade above it. And this is the low for the week. So we have this continuation structure. Now let's draw a trend line and see. Yeah, this would line it up. This would line up nicely around here. Yeah. So yeah, much rather get long at the monthly open or below the monthly open. Hope this trend line holds price and we respect the bullish structure and take some profit around this H1 level, which I expect to bring some resistance, and probably once we trade into this H1 level, we might pull back into the weekly open and then trade into this 1.8 18.3 level. So with CPI and PPI on Wednesday and Thursday, I would expect this kind of volatility and range-bound ping-pong price action to happen. So yeah, hope the main idea is clear, that I much rather get long around the monthly open before here, because just imagine you get long around this area. You have to run, I don't know, much tighter stop losses, and I'm not okay with that, but that is my style. Okay. And yeah, I have very similar thoughts on GBP, but you know, GBP has to really clear this level here. So again, I'm open to the same idea, but it would not be crazy to expect some rejection from this level. Come back to the monthly open, and then if we reclaim, now this becomes a support level, and you buy the pullbacks, hopefully to make new highs this year, but one level at a time. Yeah, shall we? So now let's move into Euro AUD. Yeah, let's do that. So last week around here, spoke about how we had this range that that represented the accumulation before breaking out at and trading into this resistance level, and the breakout failed. We retraced the whole movement, and we came back into the origin of the movement. Now, this is not bullish. This is choppy, leaning to bearish, because the breakout failed and you retraced the whole movement. And if this was bullish, you would have already seen some kind of bullish price action. Instead, all we've had have been failures to trade above the range. And the breakdown below the monthly open is not that clear, because you know, you've traded below, but you've sort of recovered, and it's just choppy, but I think it's eventually going to resolve lower. Something that would make me change my mind and forget about this deeper pullback scenario this would be to see closes above these highs and change in structure. At this point, I would abandon this idea, I think, but even if that happened, I still wouldn't get involved here. I think there's no much risk to reward here, at least for me. Much rather get involved at these highs or at these lows, but in the middle I'm just gonna get chopped, and yeah, much rather look at EURUSD and gold USD, where I see directional moves much cleanly. If we move into Euro New Zealand, you know, New Zealand has been much weaker than the AUD, and we've had a similar view as with Euro AUD. I did expect a breakdown below the monthly open in order to get involved in longs, and I really want to get long Euro New Zealand. because it's a much better long than EURAUD based on macro reasons and the chart itself. However, we've just used the monthly open as support and we are making higher highs. Even now, I'm just wary because unless we get a breakdown from the monthly open and we trade into this zone here, I really don't want to get involved in longs. And one could argue that maybe this area here could be a nice area to short. But it's not that clean, that clear for me. Just like I said, I'd much rather get involved in extremities, and with how bullish Euro New Zealand has been on when you zoom out, this is a trend up. So I'd much rather wait for price to break above these highs, give me some sort of pullback, and then long, than play the range here. I just don't trust it. I just think I'm gonna get chopped here around and lose money. So I still don't want to short because in order to short I would need to see price sort of move much higher and show me exhaustion. Then okay, I can sort of try to fade it. So I'm long biased. I think the probability for them to work is higher. So that is what I'm looking for. Longs at this area here, and longs after you have a breakout and you pull back. Then and avoid this shit in here in the middle. Especially since it's been very choppy and little range to trade. So hopefully volatility picks up, but for now, Euro New Zealand and EURUSD are no trades charts for me, and I'm sticking to euro and gold. And finally, I wanted to cover Bitcoin and Ethereum. I was bearish when I saw this breakdown, but I got out of the trade when we reclaimed this level. And if I show you on the H12, you will see how clean this level is. That's why I'm thinking of it as a pivot, because it was the last resistance we had before breaking out of this range. So when we look at the H4 on Friday after the NFP data release, we had this move up here, and then we retraced it completely. Similar on Ethereum. Now, I'm just thinking about how we left these highs here untaken on both of them. So I'm actually expecting still lower prices on Bitcoin and Ethereum, because when you look into the daily, you have your RSI divergence, and you also have it on the weekly time frame, which is even more significant. And it's very similar price action to the 2021 top. I'm not calling for all of this move to happen, but I still think we might dip lower. So my ideal scenario would be to see price take this highs, trade into this imbalance here, which is untested, and reject, break below the H12 and sort of trade lower. But this is just my views. I will not trade this because I'm much better at spot trading than futures. But yeah, this is just my views. Something like this, and at least here. But yeah, that is all for the week, and hopefully we have a very profitable trading week on euro and gold. So let's see you next week. Cheers, bye.